Well, welcome to this Financial Services Club webinar on the COVID crisis and effects on the financial service industry. I'm Mike Wardle from the ZN Group and the FS Club. I'll be chairing today's event. We've got about 45 minutes in total. The main event will be to hear from George Ravich, who's on the line with us. And I just wanted to say, first of all, thanks to the sponsors of the FS Club who allow us to range far and wide across a huge range of issues. Today, we're focusing in particular on the response of the financial services industry to the current COVID crisis and some new research which we've developed with George in the lead. And we're going to be hearing the main results of the research from George to go forward. Very little more for me to do by way of introduction, other than to say that you'll find copies of the slides and a link to download the report in the chat box on your dashboard. And also, we'll have time for questions towards the end of the session. You can pose a question for George or myself, or to give us comments and things you find interesting by typing questions into the question chat box, which you'll find again on your dashboard. Really looking forward to today's session, and I'm going to hand over now to George to introduce the report. Over to you.
Okay, thank you, Michael. It's a pleasure to be here with you. First, I'd like to just say that we did this in collaboration with Chris Skinner. He and I, a few months ago, were wondering what the effects are of the crisis on the industry. So we set ahead to put together research on a global level, and we had Salesforce as our sponsor, so that was very much appreciated. Next slide. So what we attempted to do, what we did was, we're going to do a poll first. Sorry about that. So we'd like to do an audience poll to get your feelings on some of these topics just from the very beginning. In your opinion, how have banks performed during the pandemic? Very well, well enough, neutral, could have done better, or poorly. So please take a second here and give us your answer, and we'll take a look at the results in a moment. All right, could have done, well, could have done better is the largest number. Interesting. Okay, glad to see no one said poorly. Well, you'll see in the results going forward here that I think that the industry is very positive overall, and I'll explain more as we go along. So we set out to understand 6 things: preparedness for crisis, the effects on current operations, the whole phenomenon of working from home, relationships with customers, employees, and shareholders, the future, and then current state of mind. And let me just dive into each one of these at a time. But before I do, just here's the methodology and the sample that we took. First, it was all online. It was done through SurveyMonkey, a 13-question online survey. 94% of the people we spoke to were bankers, FinTech executives, or consultants. 56% lived in Europe or the UK, 15% in the USA, and the rest of the world. 41% were from small companies, 25% were from big companies. So we had a pretty good spread across various size of companies. And lastly, about half the people we spoke to considered themselves as executives. So we feel that this was a very good representation of the industry, especially at the executive level. Okay, the first area was preparedness, and overall, here are some numbers that I think are surprisingly optimistic and positive. 77% of the people felt that they were well prepared for the crisis, overall crisis management, and that's a very, very good number. And it shows real confidence in what they have done. My interpretation of that number is that with all that happened in the last crisis, people really did have good plans. They were ready, and they were implemented, and they worked. So that's a very positive statement. Digital sales, again, 77% said that they were prepared. And what to me this means is that the shift to digital, obviously that branches were not available, people could not do face-to-face banking, that was prepared for the surge in usage that came from the crisis. Less so was the call center volume. 56% said that they were prepared, and that's understandable as well, because ramping that up quickly is much more difficult. Yeah, one of the more interesting areas was preparedness for government programs. 43% overall said that they were prepared for the government programs, which is good, but the Americans actually reported a much higher level of being unprepared. 2 times as many people from the US said that they were unprepared as the rest of the world. And actually, that's 4 times as many people from the European region that were unprepared. So clearly, the Americans were not nearly as prepared for these type of programs that ran through their banks as the rest of the world. Sentiment analysis of their current product fit and what was happening currently. Let me just explain this chart for a moment. What I did here to simplify explaining the results and presenting the results, I took the positive and I subtracted the negative, and I left the neutral out. So it's really sort of a net positive or negative. And what you see here overall is that that the financial institutions, which are the sort of greenish numbers, bars, they're just generally negative, whereas the fintechs were mostly positive and the consultants were somewhere in the middle. I'm going to dive into each one of these in a moment by industry segment, but this is just generally the trend that when it relates to products, I'll get into that in a second. So let's just go on to the next slide. This just gives an overall. So here's a deeper dive into what people from banks were thinking. The question was, how well does your current product fit in the marketplace during the crisis? 43% of the bankers said that it was a good fit. It was and it had a positive effect on their product fit, which is really surprising when you think about all that we've been reading in the industry news about how either unprepared or how the digital marketplace was more important, and legacy banks were just not prepared for a complete switch to digital. So according to the bankers, that most of them, or I should say a good portion of them, felt that it was a good fit, and it's more so than the people that said it was not a good fit. Planned introductions, the bankers felt that more so than that they were really not well prepared for that, and it was not a good, the crisis did have a negative effect on that. And that's very understandable, because in the midst of a crisis, no one's thinking about introducing new products, and certainly no one is probably interested in hearing about new products. So it's understandable that more than half the people we surveyed thought that it was negative. And same thing with product innovation. Now, in the midst of a crisis, people aren't thinking about how to innovate and change as much as just trying to deal with today's issues. The next line down, the collaboration between, go back, sorry. The collaboration between fintechs and financial institutions, that was pretty much flat. You'll see in a second where the people from fintech companies had a different opinion. And emphasis on digital sales, obviously, that was a positive effect on there. Okay, next slide. So here, like I was saying, the people we surveyed from fintech organizations were significantly different than the bankers. 60% thought that their products were a very good fit for the crisis. It was a positive effect on it. And that makes sense to me, because it's the fintech companies and their products that are going to solve a lot of the problems that were brought on by this crisis. So it makes sense that the majority of people felt that it had a positive effect on their products. And much more people felt that it was positive on planned introductions. So that's understandable as well. Innovation, that's kind of flat. And here, 53% felt that it brought them closer to their collaboration with banks. Again, very understandable considering what business that they're in. And digital sales, again, obviously needed to be ramped up because of the crisis. On the next slide, the consultants, like before, they were sort of in the middle on everything. But in general, I would just say that they felt that the crisis was having a pretty positive effect on their business, mainly because, again, these are the people that in times of crisis, bankers go to help solve the problems. So you see here just generally positive, maybe not for planned introductions, but overall, I would say that this was a pretty positive impact on their business. Okay, not all is positive, however. And this area of questioning was about how is the crisis affecting your current operations and your ability to reach your goals. And you just look at this chart, this is another sentiment analysis. You see mostly negative, and really where you see the big negatives are in the sales and marketing, who got hit the hardest. But here's an interesting insight, which is that overall people felt that the IT department, it had a positive effect on. And for me, I explain that as the fact that it was the IT department that had to enable the company to work remotely, whether it was enabling remote desktops, whether it was the security around those desktops. The IT department had an ability to really go above and beyond because of the crisis. And the feeling of our sample was that they were able to exceed their KPIs. We asked about work from home, and I find these numbers to be extremely interesting. 63% said that it was a positive effect on operations. Now think about that, because so many people thought, as this all started, that people working remotely, not coming to a central office, would have a terrible effect on operations, on the ability to get today's work done. But the people we spoke to, 63% of them said, in fact, it was helping become more efficient as opposed to negative. So I think that's a very positive result related to work from home and for the future. And following along on that, 82% said that they would support it going forward. And lastly, 76% said that they felt that this trend would reduce their need for future future space, real estate going forward. Very interesting results.
George, if I can just follow up on those. We're having a lot of conversations, I think, in the UK about exactly this, what the future is for commercial property, what the future is indeed for residential property, when actually having a good workspace at home becomes a premium. And just wonder whether, from the US perspective, those debates are going as well. Thinking some of the younger colleagues we have who are maybe stuck in less than ideal situation at home trying to work, and where going to the office might actually be a benefit. But for many of us, I think working from home is here to stay.
Yeah, I think it's the same here in the States. I would say that what people are thinking here is going forward, when this crisis is over and we could go back to normal, I think the new normal will be a hybrid, because what we're all learning here, and this survey shows it, that people can work from home. The entire company can work from home, and it's not won't have a terrible effect on current operations. So I think today's thinking is that there will be some hybrid. There will be more people working from home, whatever the scenario is, where you have a few days in the office, a few days at home. The effects of the crisis and how we've changed our work styles is here to stay. Okay, moving on. So account switching was another area we felt was very important to understand. How loyal our customers are going to be. Will the traditional banks lose lots of customers to digital banks? And again, another overall positive result here, which is great to see. 49% of the bankers we spoke to predict just a small amount of account switching, which I think is very good. FinTechs are around the same. Everyone was sort of around the same, where around half the people felt that there'd only be a small amount of switching, and really just a few people felt, a small minority felt, that there'd be a large amount of switching. Now, that does change on a geographic basis. Almost half the Europeans and Americans think that there'll be a small amount of switching, whereas the Middle East and African people we surveyed thought there would be, or many more of them felt that there would be a large amount of switching going forward. Next, we asked about the crisis effect on business relationships. And again, more positive information. 51% said the crisis had a positive influence on their customer relationships. Think about that for just a second. Again, what you hear in the industry news is generally negative, I think, but the bankers, the industry that we've surveyed, think that at least over half of them felt that the crisis has strengthened relationships with customers, has strengthened relationships with employees, and shareholders was sort of neutral or even across the board. So, so these are, to me, pretty interesting and also unexpected results.
George, we were talking just beforehand about you know, the difference in getting hold of people and being able to engage with people when everyone's moved onto digital. And certainly our experience is that it probably has had a positive impact on our relationship with customers, simply because engaging with people face to face over digital across the world has become easier. Do you think that's part of it? It's just the new norm is now that you can get hold of people quickly, you can get a wider range of people involved in your discussions because people have just moved into digital.
Yeah, I agree with that. I think that the industry was well positioned for this crisis in many different respects, whether it be digital or whether it be the call center. It wasn't perfect, obviously, when something as dramatic of a change happens as we've all witnessed. Things are not going to be perfect, but I think what you're seeing in the survey is that people felt they did a good job and that they responded well, and because of that, customers will not flee, number one, and number two, that they felt that it proved to the customers the way they treated their employees was generally positive, and those are good results. Those are good to see.
Great, thank you.
Next, we looked at what people were predicting as the long-term impact of the crisis. You see here the overwhelming majority think that there will be many changes to the industry, and almost a third felt that there would be some dramatic changes, which is pretty interesting. There was only a small number of people that thought there would be either small or no change at all. So clearly, like we were saying before, Michael, things may be a hybrid. The new normal may be a hybrid of what we're doing today and what we did prior to the crisis, but things are changed. People know now that they could work from home or remotely, and the company won't come to a screeching halt. People are getting used to, and in certain cases, I'm sure, are enjoying working from home. And the things that we're learning now, whether it's a reliance on digital or some of the other things, the adjustments that we need to make because of the situation, those are here to stay. And I think that is reflected in these numbers. Okay, and the last thing we asked was, what's your current mood? And I'm happy to say that 75% of the people were pretty positive. They were either optimistic or trying to be positive, which is great. There were only a small number of people, only 12% said that they were either fed up or they were very upset. So in the midst of everything, what you see here is a group of people that are generally positive. Of course, they're dealing with all the situation and all the problems that this crisis has brought on, but generally they're trying to deal with it. And to reflect back on what we've just gone through, again, an industry that's generally positive about not only their response to the crisis today, but I think also positive about how the crisis will shape the industry going forward. Okay, another poll. Do you think the pandemic will accelerate banks' investment in digital transformation? Greatly accelerate somewhat, stay the same, decline slightly, or decline dramatically? Please put your answer in, select one. The reason we ask this is because this has been the big debate, that because of the pandemic, because everything needed to go virtual, that banks needed to invest enormously in digital transformation, meaning being a 100% digital bank. And the question really is whether or not that actually needs to happen, or whether there's been enough enough investment already? Well, most people feel that it will greatly accelerate, which is hard to argue that there'll be an acceleration, because whether it be dealing with the problems at the call center, or being able to do more activities through either a mobile or online, clearly all the digital aspect of financial services does need to migrate more. Okay, lastly, the report is available at the address that you see on your screen. It's also, that same address has been sent to you in the chat box, so you can easily download it there at no cost. Again, I'd like to thank Salesforce, our sponsor for this, and we're happy to take questions if you have any.
Well, George, thank you very much. A really good run through. As you say, a set of pretty positive results actually in terms of people's feeling about their readiness to cope with the crisis, and indeed for their ability to cope with a big shift away from normal working patterns to something very new. So we have some time for questions, and would really encourage people to give their thoughts or to give their opinion about how positive they feel in terms of the way that their organizations have responded. We've got a first question which about whether financial services are likely to start to embrace cryptocurrencies. What's the relationship therefore between this positive digital transformation scene and the idea of cryptocurrencies and other blockchain type products? Any thoughts on that, George?
Yeah, I'm not an expert on this area, but I have been involved in it for quite some time. I remember 5 years ago, maybe longer, thinking this is never going to happen. This is never going to replace currencies as we know it today, but obviously there is a role for it in one way or another. Certainly blockchain as a technology is being adopted, not necessarily as a currency, but to solve complex business problems. But actually I do see quite a lot of activity, and it's becoming more legitimate, more so than an investment and as a global currency. So I do think that things are going to change, and in another 5 years from now, there will be transactions, commerce, pretty widely using cryptocurrencies.
Yeah, I just add to that talking to some bits of the world, local governments and local groupings are developing sort of crypto tokens, which kind of a local currency, which people buy into from local businesses and people who live in the area. And I think increasingly people are going to be looking for new ways to do that kind of business.
Yeah, I think it has a place. It's not going to replace a fiat currency for sure, in my opinion. But I do feel like where you see the adoption right now is on business-to-business transactions, which of course makes sense. And because I think it's a limited group as opposed to open to the public, at least at this point, it makes sense.
Okay. Turning to back to the question of relationships between businesses and between customers. I guess the question is about is face-to-face dead as a way of doing business? But we had a little discussion beforehand about the whole thing about trade fairs and large conferences, and the whole fly in fly out way of doing business has probably changed. But have you thoughts or picked up any insights from people about how they think face-to-face is going to be different in the future?
Yeah, I have had a lot of discussions about this. Through my consulting business, I speak to dozens of companies every month, and I would say that the new normal is a hybrid of what we used to do and what we're doing today. I don't think there's 100%. It's not absolute one way or the other. I think that people are social beings. They like to meet people. They like to see people face to face and talk. There's a lot of value in trade shows and meeting face to face. I don't think that's dead, but I do think it's going to be less than it used to be for a number of reasons. Just on the face of it, the expense, as this survey has shown, people feel that that the work from home, remote working, has not been negative on efficiency. So that sort of real-time experiment has proven that this actually could work. So I think that that's going to be adopted, and I think that when it comes to business travel, this experiment, if you will, has proven that you could get a lot of business done without having to get on an airplane and go visit the customer. But I do feel that the relationships need to occur, and those are best done by face-to-face meetings. So I think it's going to be a hybrid of the two.
Excellent, thank you. We've got a question in about what changes we think that banks need to make to their disaster recovery planning. In other words, what weaknesses, I guess, have been thrown up. And I was thinking particularly about the whole question of call centers. Those people who've relied on outsourced call centers in other countries have had particular problems. And certainly one of the things which I think people are looking at very carefully is whether they need split sites for call center operations and other customer-facing operations. But any thoughts that you have on what this has highlighted that people need to shift?
Yeah, the research, as I mentioned earlier, showed that the call centers did not perform nearly as well as their digital channel. And that's, again, understandable because it's not as easy to scale call centers with humans in them versus a digital channel. I would agree with you, Michael, that the call center customer care needs to be more flexible, and there need to be, as part of disaster recovery, the ability to ramp up very rapidly, which I have to believe was not really considered before this kind of crisis occurred. I don't think that many people had in their plans a pandemic. There might have been plans for a hurricane or some other weather-related or a fire, things that would more likely happen than a global pandemic, which only happened 100 years ago. So I think this will be on the list of things, meaning pandemics, on the list of things that you have to prepare for. And I think other situations like this where there's no in-person contact, therefore the call centers will need to be ramped up quickly. People will find a solution for that and how to do that.
Yeah, I think one of the other things is the classic disaster recovery has been to move from one building to another building, and the events we've seen recently have shown that's not always the answer. And the other thought I had is just the general risk assessment that you look for as a business. Needs to take account of a whole range of large-scale global changes that perhaps haven't been given enough attention in people's risk analysis. If you think about flooding in Bangladesh and China at the moment, you think about bushfires in Australia last year. So some of the climate change, which are also global, are likely to have impacts as well. We've got a question about any expectations that you might have, George, about the troubles which companies and households are going to have during the crisis, economic impact, and what that will do in terms of impairing the potential for growth and for business development.
Well, I think it depends on what region of the world you're in right now. I could tell you in the States, the stock market is hitting new highs, and that's very surprising considering where we are as a country, and even at a worldwide level, the fact that so much is closed down or restricted, and you can't be having a record-setting year financially or in business if that's the case. So I think it's really hard to imagine that everything is going to be fine anytime soon, because I think that what's happened around the world, this has had such a dramatic effect on the way business is conducted that there'll be ripple effects for quite some time to come. So I think that we have not necessarily seen the worst. That what will happen, in my opinion, is that this will just add up. They'll continue to the problems will continue to add up, and we haven't seen the full effect of this just yet. People still have money in the bank, meaning businesses still have money in the bank and can survive. But as the effect of this crisis continues on, and it's not over quickly, people will run out of money, businesses won't do well. And so I do think that it's going to be problems continuing in the future.
Yeah, and I think I'd add to that that there's likely to be a geographic difference in that. The countries who've done better in containing the outbreak of the epidemic have probably put themselves in a better position in terms of their economic outlook, and that may well lead to a further shift in the trade relationships and economic relationships between countries. So we'll be looking very carefully, I think, about the economic indicators geographically as well as in country.
Yeah, well, I think just like any crisis, people find ways out of necessity to adapt, and those who adapt find opportunity. I would just say that the old saying of the large shall eat up the small, I think, is being replaced by the fast eating up the slow. And I think that the faster people adapt to the current situation, finding new opportunities, either new products or new ways to deliver them, how to deal with customers in a new way, the faster companies can adapt, the better they'll be. There's a large retailer in the States named Target that just announced their results today. They were amazing results, way beyond what the Wall Street was expecting. And the reason it was so good is because they had adapted extremely quickly and now are able to offer customers many different options that are right for the times. So I do believe that the speed of adoption and adapting has a great deal to do with how well the results are.
Interesting question here. How would you measure success for a company's handling of COVID-19? In other words, if you're looking at a company, you just mentioned Target as an example, what are the things which look like success for the people you're dealing with in terms of responding to the crisis?
Well, a lot of it is what I was just saying, is the speed of adapting your business model, your sales and marketing to the new reality, the new normal. Again, as I was saying earlier, I think that going forward, there's going to be a hybrid. We've all experienced something that we're not going to forget, and there have been some good things and bad things. The good things, I think people are going to want to build upon, and that will be adopted as the new normal. So I think responding well or performing well in this crisis means being able to see quickly what will work and what won't, and building on that. And whether it's adding to your call center or improving your digital channel, whatever the case may be, the speed of adoption and adapting, I think, is really the hallmark of a good response.
That's great, thank you. I think prompted by our discussion about geographic difference, there's a question of focusing on China, really, with China seemingly still going despite being the origin of the pandemic. What does it mean, I guess, politically and economically, as China still seeks to build an alternative finance world away from the US dollar? It's a really good question. I mean, China has been growing. It's back in growth. It had a very quick recovery economically from the initial effects of the pandemic. And it is seeking to see the renminbi seen as an alternative major currency to the US dollar. My own view is that until the Chinese economy opens up further and you can actually trade openly, both in the currency and in terms of goods, with the Chinese economy, it's unlikely to challenge the dollar as the in currency terms. I wonder if you had any thoughts on the political and economic outcome of China's continued strength.
Well, that's really out of my wheelhouse. But as a casual observer, of what's going on. Michael, I agree with you that the economy and politically how China conducts itself has a direct effect on how open their currency will be adopted. But I do see a world in the future where there are choices, where the Chinese currency and the American currency they coexist. I think that China's too big and too influential, and making the right investments around the world with governments that for it to be number two. It may be number two, but I do believe that it will be a major currency going forward.
Okay. There's a question for you directly, George. If you were to make an ask or make a recommendation to the audience, having seen the results of the survey, what would your ask be?
Meaning that the people who are with us today are from financial institutions and the ecosystem around financial institutions. I would say that what the survey has taught me, the insights it's provided me, is that this crisis is different than the last crisis. I think that the industry has given itself good marks for its preparedness and the way it has reacted to the problems that have occurred. And I think that's very positive. 2008 was a bad lesson, a bad time, and we all had to learn some very difficult lessons, which I think the industry has done. So I think that the reason why these results are generally positive is because of that. So I would just say that, as we talked about earlier, that being prepared for this kind of crisis, because it may happen again, and other ones like that, I would say that thinking of the things that are really unimaginable when it comes to crisis management is worth it, because as we can see, sometimes the unimaginable does occur. So I would say to the audience, think about that, and I would say that addressing some of the areas that came out in this survey would be a very good idea.
Excellent. Well, at the moment we don't have any further questions coming from the audience, and I guess the interesting thing will be to think about rerunning this survey in 6 months' time, seeing if people are still being quite as positive. For our part at ZN, we've been asking some questions alongside the Global Financial Centers Index about people's intentions in terms of the balance between home and office working and meeting in person or not, which will come out in September, so we'll be able to add to the debate and discussion then. But if there is no more questions, it just remains for me, I think, to thank you very much, George. Fascinating report, and it's been really good to see such clear messages which are positive from the financial services and fintech sector, but also to get indication of those things where we could do better for the next time we need to face a major difficulty. So thank you very much, George. Thank you to the audience for watching. There will be a recording of the event available in a couple of days up on the website. So if you want to go and revisit or share it with colleagues and friends, that's available to you. Just up on screen now, you see what's coming up in terms of our program. Case study from the Fair Banking Foundation on accredited ethical banking on the 25th, and a focus on Toronto on the 27th of August, where we hear from Toronto Finance International and the Stock Exchange, which should be a fascinating call. 2nd September, we have a focus on the City of London and the smaller offshore international financial centres, which are an important part of the way in which international finance flows take place. So just thank you very much for attending today. Do come along to future events. And George, normally at such an event, we'd be able to give you a huge round of applause. You'll have to take a virtual one on this occasion, but we do thank you very much. But we do thank you very much for the research and for sharing your insights with us.
Yeah, thank you for having me. It's been a pleasure working with you. Thank you.
Thanks, everyone. We'll see you soon. Bye-bye.